All right, welcome back to the Flow State Podcast. I'm your host, Marshall Medallion, and today we have a very special guest, one of the top mortgage brokers in the region and managing partner of Cincy, Breon Price. Welcome to the show, brother.
Super happy to be here, man. Excited.
Yes, sir. So we'll start from the beginning. How'd you initially break into the mortgage industry? Excuse me.
Yeah, so it's the only thing I've ever done, which I think is wild. I started in 2012, so 14 years. I think it's kind of crazy to look back and be like, I've done one industry for 14 consecutive years.
Wow.
I'm 35, so it's 14 years in this industry is a long time.
For sure.
But I still feel like I'm on the younger side, or that's what I tell myself.
Yeah, definitely.
When you cut the grays out of my hair, that's what I tell myself. So, but no, I started as an intern. I started on the operations side, right? So the back office, underwriting files, and from 2012 to basically 2018. And then 2018, I went to the two owners of the company that I was working for. They owned the bank. And I said, hey, thank you for the opportunity. It's been an awesome 3 years. I've learned a ton, but I am just so burnt out of this. I was living on the West Coast, and I wanted to get back to Cincinnati. And they were like, yeah, that's cool, but we don't support that. And we think that you should stay on the underwriting side, on the processing side, and nobody ever converts from underwriter to sales, just not a personality thing. And I was extremely defeated, and I told myself, if they don't want you to do it, that doesn't mean that you can't do it. And that was kind of the fork in the road, or the Michael Jordan moment. I took it personal.
Right.
And so that night I stayed up and I created a whole business plan of everything that the bank that I was working for did not do a good job at. And that's kind of the formation of the company. So when we started the company in 2018, we had a very small box of who we wanted to work with. It was almost like a private banking style experience.
Okay.
And it's kind of crazy because when you think about it, if you start a company, or a lot of companies want to start it hey, we want to start with first-time home buyers. That's how a lot of realtors or a lot of loan officers start. They start at the bottom, and then once we get really good, we'll start working with the higher-end clientele.
Right.
We took the opposite approach. When we started the company, we said we're going to start at the very top. And we're going to go after the creme de la creme. We're going to go after the athletes. We're going to go after the executives, and we're going to offer them an amazing product. And that's the only thing we're going to market towards. Okay.
Like black tie service.
Exactly. And the goal, or the kind of the saying was that we're going to aim high and we're going to fail high. So if we aim for the top qualified people, and we want to work with them, if somebody refers us somebody that falls underneath that, that's okay. Okay, that's perfect. We'll work with them too.
Right.
And that aim high, fail high mindset has stuck with us, from basically the very beginning.
Right.
And it was, jumping into the sales side was super fun. It's exciting. We we get to work with who we want to work with, and still 14 years in, or well, I guess. 6 years in, we're 8 years in, geez, 8 years in, we're still working with the same clientele that we started with.
Wow.
Our box has expanded. We work with first-time home buyers now. We work with investors now. But the majority of my production, the majority of the clientele I work with, still fits that same mindset that we started back in 2018 with.
Wow. What was that defining moment when you realized you could dominate this area, Cincinnati, Northern Kentucky?
Yeah, so going back to when, I asked the two owners of the company that I work for, hey, I want to get into sales, they said no. It really made me look at Cincinnati as a whole. And so okay, where do most people go get a mortgage from? We have a couple different big banks here. Obviously, the biggest one is headquartered here, but we looked at the client experience that those clients were getting, and we just felt like it wasn't that great, or the product wasn't there. Right. So, you have service and you have the product. The product is the rate.
Right.
Okay. So, we sell interest rates, and the service that comes along with that. To me, it's the same thing as Mercedes-Benz, right? It's you go and you buy a Mercedes-Benz, just a high-end car. You're buying that car, but then also you have the service that comes with it, right? So how was the experience? It's the same thing in our industry. And I always felt like those that offered the best service charged a lot for it. And that excluded them from a certain type of clientele. Our clients, they're qualified. They can go to Chase, they can go to Fifth Third, they can go somewhere and basically anywhere and go get a mortgage, right? So we're going to offer a product that's better than what they could go get, typically on the street. And if we offer really good service that comes with it, that's perfect.
Right.
We've always thought of it as like offering a really good service should not be something that you shout out. Right? Like that's expected. Like I don't expect to get shitty service.
Right.
I expect to get really good service.
Yeah,
or I expect to get good service.
Yeah.
And then if they exceed that, then like, bam, Nick, now we're going.
Yeah.
Right. So when to answer your question about when did we feel like we could dominate? Basically, once we realized that our product was better than what everybody else was offering. And we had our original business plan. The bank that we partnered with, they gave us a rate sheet, or they gave us rates that we really didn't deserve at the time. It was kind of like hey, we'll give you this, we'll let you run with it. If you do a really good job, then we'll keep it going.
Right.
They believed in us, probably before we believed in us.
Wow.
And then once we really started to connect, and rather than me reaching out to people started reaching out to me to, hey, I heard that your interest rates are really good. So-and-so told me to give you a call. That's when it started to really click, like, wow, we're really onto something here.
Yeah. How important is having that network for brand recognition as well as referrals?
Yeah, so, I never wanted to be, and still don't want to be, the mortgage guy. That's not how I want to brand myself.
Right.
I love being the mayor of my sphere.
Yes.
I love that term of like, hey, you'll be the go-to person, whether it's a reservation,
right.
whether it's, whether it's, hey, what realtor should I work with? Whether it's, hey, do you know somebody at Mercedes-Benz, or do you know somebody at Porsche, or do you know, I want to get into Jeff Ruby's. Do you know anybody there? Like, I've always wanted to be kind of that person that can help people,
yeah.
The connector per se.
Yeah.
And, that's everything.
A broker of relationships.
I love that. I mean, that's really, what we've tried to be. It's really fun to be that person.
Yeah, I agree.
I get a lot of satisfaction out of helping people get to where they want to be.
Yeah.
Whether it's personally, professionally, educationally.
Yeah.
We've built our whole business on it. Like,
yeah.
we do not buy leads. Like, I am anti buying leads. I'm anti cold calling.
Right.
That's not how I want to do business.
Yeah.
I want to be, a triangle of trust guy.
Yeah.
Like, hey, like, I know Marshall, you know Marshall, we should do business together.
Right.
And, if you can build that, it's such an easier process, right?
I agree.
It's, rather than going uphill and having to validate, selling your product, the relationship's already sold it.
Right.
Your job's just not to mess it up.
Right, right. No, it's funny that you say that, because you've brokered relationships for me. I remember when I was a young barber, didn't have any established credit, hit you up. I was like, I need a car.
Yeah.
And you're like, go see my guy Tom.
Yeah.
And I go in there, talking to the salesman. They're like, I don't know if you qualify for anything. I thought, the look was over. All of a sudden, Tom comes out of the back talking about, hey, Breon, we just went to Aspen. We just got back from Aspen.
Yeah.
And he was able to get me a car, and so perfect example of that. That's awesome. The real estate market shifts constantly. How do you keep your finger on the pulse of local trends without getting overwhelmed by all the noise?
Yeah, no, I mean, it's super prevalent right now, and to kind of set up a backstory behind it, in a normal market, okay, interest rates may go up or down a quarter over a month, right? And the Fed, okay, so Jerome Powell and the Fed, he's the Fed chairman, and that board, their policy for probably the last 25 years has been no shock, no awe. very steady, very predictable. We want the market to be able to basically anticipate what we're going to do months and months in advance, okay? And they still have that mindset. The problem is the current political environment that we're in, it's much shock and awe, and probably the more shock, is what they want. Whether you're on the right or the left, I think we can all agree that they like the unpredictability, and they use that as a sales tactic, or not a sales tactic. They use that as a tactic of negotiation.
For sure.
And I respect that. And they do a very good job of it. Clearly, the problem is that when the market doesn't know what's going to happen and they have a hard time predicting, you get massive swings in rates. Yeah. So, if you look at it, we were 4 weeks ago, before the war in Iran, we were probably trending, mid fives interest rates, 5.6, 5.7. And then, basically over a weekend, things change. And then now we're approaching 6.2, 6.3. The problem is, that doesn't necessarily impact somebody's payment all that much. Maybe, on a $500,000 house, that's a $350, change in somebody's payment. Maybe a little bit less, okay? But from a mindset standpoint, that's hard to swallow, right? So what that does is it takes people like, you know what? Like, I really wanted to buy a house, but now maybe I'll wait, okay? And our job as loan officers and realtors is to take that perspective, like, hey, this may still be a really good opportunity, and find the positives in any market. One of the positives when interest rates go up is you may not be able to afford as much home, but higher priced homes become on sale, right? So if you take an $800,000 house, for example, the amount of people that qualify for that home at 5.5% interest rate versus the amount of people that want to buy that home at a 6.5% interest rate is dramatically different.
For sure.
So we always say luxury or higher end homes are more on sale now going into the summer than what they probably have been in a really long time.
Right.
So, you got to find the positive. I'm a very much glass, half full type of person. I'm optimistic.
Yes.
Probably somewhat too much in certain situations, but the market's going to go up, the market's going to go down.
Yeah.
I think what we've realized is that doesn't necessarily impact people buying homes as much as what we thought it would.
Right.
It might impact the price of home that they buy. When interest rates are a little bit higher, then sometimes people don't buy as expensive of a home.
Right.
But this, man, with a growing family, if your wife says we're like this house doesn't work anymore, it just doesn't work anymore. You have to go on and you're going to go buy another home.
Yeah.
So, I think we do a pretty good job of navigating that. We have some really awesome realtor partners that know the markets. Our housing market in Cincinnati is extremely resilient.
Yeah.
We appreciate at 6 to 7% a year. Some areas even more than that. So, when you look at that, that's a huge value add as opposed to some markets like Tampa, or Denver, or cities that maybe are a little bit bigger than us or maybe a little bit smaller than us. Their valuations are all over the place.
Right.
Houses are dropping. Our homes continue to increase year over year, and I think that's a product of being in the Midwest. We're a little bit more conservative. Just because somebody can qualify for an $800,000 house doesn't mean that that they want to buy an $800,000 house.
Right.
And that's a great position for us. As the person lending them the money, we like that mindset, right? So,
Yeah, I tell a lot of my clients, a lot of people are hesitant to buy homes because they're waiting for that kind of like perfect time when interest rates are like the best. In my perspective, I could be wrong, but you can speak to it, is that I think there's going to be a day where people are kind of like ready and the inventory is not going to be there.
That's right now. And really, like in Cincinnati, that's what we've been in for the last 6 years.
Okay.
Is that? I mean, it's truly, maybe even longer than that. We have a massive inventory shortage.
Yeah.
There's no real solution. Cincinnati, by default is on top of each other's city. Like if you look at, where our population is centered versus like a Columbus or a Cleveland, okay? we're very much on top of each other. So, there's not a lot of like ways to grow unless you expand. Now, what's happening is like the gap between Cincinnati and Dayton is becoming closer and closer together. Obviously,
sure.
the cities aren't moving, right? But
Yeah.
the amount of clients that were maybe looking in Westchester that are now looking in Monroe,
Yes.
like that's kind of the same thing now, right?
Yeah. Same thing with like Anderson and Batavia, and
Exactly.
people starting to move out that
Yep.
way.
Like I remember when it's like I wanted to be inside the 275 loop. Well, now a lot of people are okay with being outside the 275
Right.
loop. A lot of people that were looking in Kentucky or in Ohio are now looking at, hey, you know what? Like we can go into Kentucky because we might get a little bit more. We might,
For sure.
we might be okay with, Anderson, but on the Ohio side. But then we want to be in Fort Thomas or
Yep.
Fort Mitchell
Yep.
on the Kentucky
Yep.
side.
Yep.
So that's really cool. That's a really good thing, for that. But there's no perfect time, right?
Yeah.
I mean, you try to time the market. That's like trying to buy a stock.
Right.
And you might win.
Yeah.
Or interest rates come down, right? Like, oh, I want to wait until interest rates go to 5.75%. Okay, like they're going to hit there at some point. But what people don't realize is that like they're hitting 5.75% for everybody. So the amount of people that like could buy that home at 6.25%, okay, but are waiting to go to 5.75%. Well, now you're competing against all of those other people, right? So that $800,000 house that I was talking about earlier, you're bringing a bunch of people back in. And what happens if you bring a bunch of people back into the market, now an $800,000 house gets bid up to $825 or $830.
Yeah.
So you end up just paying more. So
Wow, that's an interesting perspective.
you have to look at the whole formula, and if you don't do this every day,
Yeah.
right? It's hard to take the 30,000-foot view of it. That's where we come in. Is hey, explaining to people, this is how I would structure this loan, so that way, yes, your payment might be a little bit higher right now, but we can refinance it when interest rates drop. That's a big part of what we do. That's a big part of what we rely on the realtors to do, of finding the value in properties. The value may be a little bit just based off of where the market is interest rate wise.
Right.
So that's a big shift, from 2018 from when we started. Interest
Yeah.
rates were a lot lower.
Yeah.
Then you go into COVID and interest rates bottomed out. They're not going to go back down there. I mean, a question we get all the time is, what would it take for interest rates to drop back into threes? Like a really bad situation,
Right. Right.
That's that way. We do not want that to happen again.
sure.
Even though it was great, and some industries crushed it and made a lot of money, and it was really good for a lot of consumers. There's a lot of really bad that comes with that, and I don't think we want that to happen again. I think we want interest rates, to be, low fives for your qualified clients. Like that is going to allow sustainable growth year over year.
Right. So you're known for moving really quick and being incredibly responsive. How do you structure your day to maintain that standard of customer service without burning out?
Yeah. So I definitely burn out. I think everybody that that loves what they do and lives their career. I think we all burn out. It's just a matter of how do you recharge? How quickly can you recharge? And and how do you maintain having a life, having a family, having spending time with my kids, and but also like this is my career. I love what I do.
Right.
It's a lifestyle. We always say that, and it comes back to service is expected.
Right.
If you want to work with me, I am forever grateful for that.
Right.
I know that my clients can go anywhere. Just like, there's how many barbers that are out there, but I come to you every week, right? Because I know, the service that you provide, and I respect that, and so we, if somebody calls me, especially to purchase a home, right? Like that's such a big moment in their life that, and they want to work with us, then I feel obligated to work with them right away, or at the earliest possible convenience for me.
Right.
And in this industry, it's I've had the pleasure of having a lot of successes in it, and I want to keep that up.
Yeah.
And I want to be known for that. I want to be
Yeah.
known for the guy that goes above and beyond, that works on a Saturday, works on a Sunday. And the cool part is I think you get accustomed to it.
Right.
You know, and I think my family gets accustomed to
Right.
it. You know, I think my wife understands that, hey, you know, on Sunday, you know, at 10:30, if somebody calls me, you know, it's probably because they want to buy a home. And that's the really cool part too. Like, oh, you take calls on the weekends. Like, the calls you take on the weekend isn't for the person that's like, hey, I'm kind of interested in looking at buying a new home. No, typically that person's like, hey, we just walked through this home and we want to make an offer on it.
Right.
And so it's like, boom, like, let's go right now.
Right.
You know?
Yeah.
And so, you know, I cherish the moments where it's a little bit slower,
Yeah.
and I get to spend time with my kids, and I get to, you know, really engage. But I love the fact that, like, when my phone rings
Yeah.
with a client on the other end,
For sure.
like, they're probably ready to buy a house, and we want to, you know, that's what makes me excited.
Yeah, for sure. So next, if you don't mind talking about it, talk to us about last year's stats and how you aim to break them this year, and also talk about some of your upcoming sponsorships and stuff like that.
Yeah, so 2025 was another killer year for us.
Congrats.
You know, appreciate it. We've pretty consistently had a 20 to 25% growth year over year. So, you know, in 2022, I had a pretty big mortgage team. So we had about 26 people that work for us. And so I was running the company, but then also doing my own personal production. And that was really hard. And the burnouts were happening a lot quicker. Yeah. I realized that I'm probably not the best manager per se. My management style has always been follow what I do and mimic it. You know, sometimes I don't probably do a great job of explaining the whys behind it.
Yeah.
And so
you're not a teacher.
Yeah, I'm not
exactly.
a teacher. No,
No,
like, I'm like, hey, this is what I'm going to lead the way, and I'm gonna break the wall down.
Yeah.
You got to follow, right?
Yeah.
That's
Yeah,
always been the tip of the spear per se. And so, you know, basically in 2022 all the way through 2025, I've been constantly kind of looking for an off ramp to the team per se, and you know, we found it. We found a really good home for those guys. A lot of those guys still work there, which is something that I'm very, very proud of. That I found a good enough home to where 90% of the people that used to work for me still work for that company.
Yeah.
It's a company called Go Rascal. They're based out of New York, and
Okay.
Scott and David have done an amazing job growing that company,
Yeah.
and I'm grateful that they've took on my team the way that they did.
Awesome.
So when you look at it, you know, okay, you know, now that that's off-roaded or, you know, off-ramped, what can we do personally, right? Like now, you know, there's no more revenue coming in from the team, so now it's all on me, and I love that, and it's been great, and I think the stats prove that that's what I'm really, really good at is getting into the thick of it and working with these clients, being the loan officer, being the person that's actually doing it. So, you know, we average right now about 25 to 30 loans a month. I have a team of 3, including me. So it's me, and then I have 2 processors that work the files, basically once a client is under contract or once they've committed to working with us. So from a per person perspective, we're probably, you know, top 1%, maybe even a little bit higher than that. The Cincinnati doesn't have the biggest homes in the world, right? So our average loan size is around $335,000, which is really good for Cincinnati. But from a nationwide perspective, it may not be.
Right.
It's not Tampa. It's not Denver. It's not. You know, I got a buddy in Seattle that, you know, I closed 25 loans, and, you know, for $8 million or $9 million. He closes 15 for 12. You know, it's
That's
like
crazy.
I know, it's like God put me in Cincinnati. It's a bunch of farm country out here. No, but we're really, really grateful for the clients that work with us. And, you know, with the University of Cincinnati, so that's the big partnership that you were alluding to. Something we've been working on for a really long time. You know, I've always loved UC sports. I went to UC. My wife went to UC. We go to all the football games. We go to a lot of the basketball games. And I've had the pleasure of working with a ton of the coaching staff, and we wanted to expand on that. We wanted to, hey, how can we expand the service, the product that we're offering to the entire university,
right?
And and give back, that way. So we created the sponsorship program. We created a specific mortgage product for them. It's called the Bearcat mortgage. It's a crazy reduced interest rate. And we basically don't charge any closing costs for it. So we give a $1,500 credit towards the closing costs.
Nice.
So it's available for employees, coaches, staff, and alumni. Okay. And then for right now and for the foreseeable future, we've kind of expanded it to just fans of the program. So, basically if you go on to the, Go Bearcats Instagram page and you like it, then I can justify giving you this product.
Right.
Because we want to make this really, really big. We want it to be Bearcats helping Bearcats.
Right.
And it's really cool. It's a going back to your original question, how did you get into the business? Well, I was an intern, while I was at the University of Cincinnati.
Right.
And then now, full circle, I'm now the preferred mortgage lender for the University of Cincinnati Athletic Department. Yeah, and
that's what's up.
And it is. It's something that's really cool. If you look at all the places that they could have went to ask to hold that title, to hold that position,
right?
For them to believe in us and my team is something that I'm really, really excited about. And we have 2 interns that work for us now, which is really, really cool. So
awesome.
That's like true full circle.
Yeah.
Very excited.
Yeah, that's awesome. How important is it to surround yourself by heavy hitters or even mentors calling out your potential?
Yeah, I mean, we've always taken the approach, or I've always taken the approach of, you should be the dumbest person in the room, and if you find yourself as the dumbest person in the room, then you're in the right room.
Right.
And, you should surround yourself with people that are going to help you, mentor you, and ultimately tell you what you may not want to hear.
Correct.
And I have an amazing CPA, I have an amazing attorney, I have an amazing business mentor, and I lean on those guys. I lean on my attorney to make sure that we stay compliant.
Yep.
I lean on my CPA to make sure that you keep me out of the IRS prison. Right? I'm not trying to be Wesley Snipes over here. I pay my taxes, and I lean on my mentor to not only hold me accountable, but to set the standard.
Yes.
And I think that's a big thing, that everybody's got goals, right? And everybody's got dreams. But how many people have a standard?
Wow.
And that's like, that's what I love. And, that John Gruden thing on Hard Knocks where he's like, I'm not in the business of dreams anymore. I'm in the business of nightmares. Like that, really resonated. And, I'm not an NFL player, right? So I don't really have the nightmares, but I have a standard. And I hold myself to that standard. And when I can't hold myself to that standard, I make sure that those people that surround me do. And
so is he talking about the nightmares or what scare them if they fall off or something like that? Yeah.
I mean, it's when John Gruden talks about that, it's you versus that other person.
Yeah.
And and if they win, you may be out of a job.
For sure.
And if you're out of a job, how are you providing for your family?
Yeah.
And I remember one time I worked for a company, and one of the owners, he said, hold up your right hand and hold up your left hand. And he said, your right hand is making that cold call, doing this report that you need to do, and and all the things that you don't want to do on a daily basis. And your left hand is your not being able to feed your family, having your wife disappointed in you, telling your kids that you can't buy them what something that that they need, not just they want, not being able to go on vacation, not being able to do the things that you want to do. Which one's going to fall first? Wow. Right? And I will do whatever it takes to provide for my family and live the lifestyle that I want to live.
Right.
So, I'm going to hold myself to the highest possible standard. And I think what's really, really cool, and you can probably appreciate this in your industry, a lot of times I feel like we hold ourselves to a higher standard than what the client does. You might be more disappointed in the haircut. You hold up the mirror, to me, and it's like, I'm like, bro, it looks great.
Right.
And then how many times do like you do the one more loop around and you go and you make one more adjustment,
Bro.
and like that's like, but I think that's the edge that some of us have and a lot of us don't, right? It's like, I'm going to hold myself to a higher standard. I'm going to answer the phone call. I'm going to stay up late and figure out why something's not working. I'm going to find a solution to it. So many people don't do that, and I think sometimes we forget that, and that's okay. It's okay to have that mindset, to obsess over what we do. Like, this is what I do. I love doing it. I don't want to do anything else, and I want to be the best at what I do.
Right.
Like that's whether it's I want to be the best at everything that I do. Whether it's ping pong, whether it's being a dad, whether it's it's whatever. I'm going to do everything I can do to be the best at that.
Wow, I love that. Real quick before I go to the next segment, I definitely want to personally thank you for setting that standard, because I remember when I was a young barber, I definitely had a lot of I would just say pride in that I could afford to show up when I wanted, or have this like residual clientele that, people will wait for it, or, whenever I show up that, I'll just always have that. And going into COVID, and just, not necessarily redirecting, like if I couldn't get a client, I wouldn't always like redirect them, or I wouldn't always like value them as much in the early years. You were one of the people that, stuck with me, and really without telling me what to do, you definitely always, can you come in any earlier? Can you come in on your off day? I'll pay extra. You were always willing to ask and incentivize and value my time. And through seeing you in those, early years, you were also an example of what I could be doing. And I was like, I never wanted to lose that, because you were one of those people that was just like, yo, you're ambitious, you're killing it, you're getting cut early because you got a big day, whatever you're doing. So for me, I appreciate you, calling that out of me. And, I remember I used to come in, I think at 10, and then you were like, can you come in at 9? And then I came in at 9, can you come in at 8? and now we do 8 all the time. And I'm like, what was I doing? Like, and 8 ain't even that early. It's early maybe to get a cut, but it's not early. Like, people are on the road at 6.
The guy that I now report to, if I need to get a hold of him, it's at 5:30, 6 o'clock in the morning.
Wow.
He's already rolling. And if I call him, I called him this morning at 7:30. All right? He didn't answer because his day is already gone.
Yeah.
And I think that's just what happens. We all have 24 hours in the day.
Yeah.
And, and we all have kids. And, I have a non-negotiable, 5:30 to 6:30, unless it's an emergency. Like, I really try to spend that hour with my kids.
Right.
So that means I got to start earlier. Now I'm not
5:30, 6:30 in the morning?
Yeah.
Wow.
And so, so 5:30, 6:30 at night.
Okay.
That's
cool,
when
cool,
I want to, basically once my kids get home from daycare,
Yes.
I'm gonna spend an hour with them,
Yes.
uninterrupted, phone on airplane mode,
Right.
ready to rock. And everybody has that mindset, right? So, but I got a lot of things that get done. Andy, the guy I was referring to, he's got a lot of things that get done.
Yeah.
So if I got to get a hold of him, it's 5:30, 6 o'clock in the morning sometimes, and he's already rolling every day by default. It's crazy. I used to think it was a joke, and then I called him one time and he answered. He's like, "Hey," I'm like, "Damn, you really are awake right now. This is crazy." And so, it takes what it takes.
Yes.
Like, that's the mindset that I think a lot of us either naturally have, or you learn, and you either do it or you don't.
Right.
It's whatever it takes. And you had that, right? It's like, hey, I want to grow my business.
Right.
There's a whole bunch of people that cannot get their haircut after 9:30.
Right.
After, it's very hard for me to get my haircut after 9:30. My phone's ringing. You got to stop cutting.
Right.
Now we're behind.
Right.
So it's like, we got to start earlier.
Yeah.
To get it rolling. And even today, right? It's like, you saw it, 8:45.
Yeah.
My phone rang, and then I hung up, and then it rang again, and
Right.
then it rang again, and it rang
Right.
again. And so, that's the blessing and the curse that we signed up for. You know, it's we always say now, and you probably see this in your business, it would be really hard for me to slow it down. Like, we have so much positive momentum.
Yeah.
And we're doing so many things right, knock on wood. We're going to grow organically. You know, now it's my job to exceed the organic growth, right? Like, I don't want to just grow at 10 or even 15 or 20%. I don't really, you know, we grew at 20% and we had 26 people, you know, and I was managing all of those people, and I owned the whole company, and I was doing all these things, and I decided I didn't want to do that anymore. Okay. So now my personal business, you know, should grow more than 20%.
Yeah.
Right. Like, I have more time in the day. I've offloaded a bunch of problems, a bunch of management that I used to have to do. I should be able to roll.
Yeah.
You know, and so and you know, thankful we are. You know, we should grow leaps and bounds this year than what we did. So you know, it takes what it takes. I mean, I'm going to do whatever it takes to grow, and you know, I think it's okay to fail. It's okay to try different things. I mean, we used to work with a bunch of West Coast-based clients, and you know, I was up super late at night, and then also trying to wake up really early, and realize, like, hey, you know what, like, there's probably some diminishing returns here. Maybe instead of going with California clients, we go find, you know, Florida clients.
Yeah, exactly.
And now we got a big base in Florida, right? And we're on the same time zone, and it works really, really well. We've expanded more into the, you know, to the Midwest. You know, so I have some Chicago-based clients that want to buy investment properties here. Much better fit than the California clients. Not because they're better clients. It's just it's easier to work with them.
Yeah.
You know, they're only an hour behind us.
Right.
So. You got to be okay with failing. You got to be okay with making adjustments. You know, I invested a ton of time into trying to grow a Seattle-based brand, where, you know, we were doing business in Seattle. We were doing business with Seattle people in Cincinnati.
Wow.
I was flying there. I was so tired, and I had to catch a flight out of Columbus. I took an Uber from Cincinnati to Columbus. Because I didn't trust myself to make the drive. Yeah. And like, that's how committed we were to growing that, and it failed. You know, it didn't fail. You know, we just decided, like, hey, this isn't going to work. We basically turned it off. So now all that effort, all that time, all the money that I spent on flights, all the happy hours that we did out there, everything, you know, we basically just turned it off. Yeah. And you know, I was okay with that. Yeah. You know, it sucked, but like, hey, you know what? Okay, so what are we gonna do now, right? It's not like, you know what? Like, we're just not gonna do that anymore. Yeah. No, we're gonna redirect all of that, and we're gonna go down to Orlando, and we're gonna go down to Miami, and we're gonna go down to, you know, to Tampa and St. Pete, and we're going to start doing second homes down there. And that's what we're gonna do instead. So instead of going and getting West Coast-based money to invest in real estate in Cincinnati, we're gonna go become an amazing second home lender down here. So, you know, we take our clients, you know, everybody that lives in Cincinnati, it's crazy. Cincinnati is the most, like, predictable city, right? It's like, where do you vacation? Oh, either Hocking Hills, Norris Lake, or 38, right? Like, I guarantee you, if you ask somebody where they've vacationed in the last 2 years, they're going to tell you one of those places. That's just what happens. But every time you go down there, every time I go down to Florida, what do? I pop on Zillow, and I'm like, man, what do homes go for? Like, wouldn't it be awesome to have a place down here? Yeah. And a lot of people have that same idea, right? So, you know, how do we capitalize on that? How do we show people, hey, this is actually doable? You can buy a home here, and, you know, an investment property or a second home. You can stay here, you can vacation here with your family, and then when you're not here, you can rent it out. Right. That's a huge stream of business for us right now. Right. And it's all Cincinnati people that are all buying down there, and it's really fun. It's great. There's a bunch of tax strategies around it. So we connected with a bunch of CPAs that specialize in that. We connected with a bunch of property managers and realtors down in Florida. You know, and so now we're growing the business that way. Right. So, you know, you got to be okay with trying something different. If it doesn't work, it's okay to kill it. If it failed, it's okay. Right. You know, then go find something else. So.
I love that. I feel like you've already dropped so many gems, but what's one last piece of advice for young lenders or aspiring entrepreneurs in general?
Yeah, I mean, so many things, but I think, aim high, fail high is, we stumbled on that, and that has stuck with me from literally day one. And, maybe even like, going into college or I would say even going to college. I grew up in a town of 6,000 people, right? And, there was one other person in my class of 99 that went to Cincinnati, or that, we were going to go to University of Cincinnati together. And I always said, if I don't like it, then I'll go to Miami, Oxford, where like half the other people went. Or if that really doesn't work out, then I'll go to, Toledo or BG or somewhere like that.
Right.
And nothing against any of those universities.
Yeah.
But I really liked UC, and I wanted to give it a shot.
Yeah.
And, and it's the same thing with business, right? It's like, I always will remember the backup job that I had at my company back in 2018. I gave myself 9 months. I said, I have 9 months to make the same amount of money that I was making working my W-2, salary job. And if it doesn't work out, then I had this job pinned in my LinkedIn that was to be a remote underwriter in St. Thomas, like the Virgin Islands.
Yeah.
And I was like, looking back on it, like, damn, like that would have been a great job when you think about it, right? Like, but starting a company, growing a company, and doing that, that's what I think all entrepreneurs aim for.
Yeah. And
did we grow the biggest mortgage company in Cincinnati, which was eventually what the goal was? No, but we grew a really, really successful company,
right,
that provided an awesome lifestyle for me and my family,
right,
and got a lot of people their start.
Yeah.
So that aim high, fail high mindset, you gotta stick with that.
I love that. So I know you're on social media. Where can people find you at?
Yeah, social media, LinkedIn. That's one of the really cool parts about having the first name Breon. Mm-hmm. There's not that many of us out there. So you Google Breon Price or Breon Price Loan Officer. My info is pretty easy to find on there. But feel free to call or text. We love working with people that want to purchase a home. We love working with people that want to be real estate investors, that want to own second homes. Yeah. So very excited for the opportunity to be on the podcast. Yeah. This is awesome. I remember when this was an idea,
right,
and then now we're rolling. I wasn't even like, I'm going to let him try it out first. Now he's rolling. I looked on Instagram, and I'm like, damn, this has got a lot of followers. It's got a lot of posts. So I'm pumped.
Thanks for coming in, bro.
Appreciate it.
Yes, sir. Well, you heard it here. Make sure you like, comment, subscribe, and we'll see you guys next time.